Oh man, so Bitcoin is sitting at $39,000 and is pretty much acting like a stable coin. It's been very range bound. We've been seeing it trading in this sideways pattern, but today the FOMC starts its 2-day meeting. Yes, the FOMC will sit down, chaired by Fed Chairman Jerome Powell, and we're going to hear a decision on how we're going to see interest rates move. Are we going to get our first increase in interest rates tomorrow? That would be called liftoff. And are we going to see a single interest rate hike, i.e. 0.25%, or are we going to see a double at 0.5? A double would spook the markets. We'd see risk off, and we could see Bitcoin fall out of the wedge to the downside. That is what I'm preparing for. And maybe even revisit the likes of 33 and 32 in terms of pricing if we saw a double rate hike. If we see a single one, I would expect the market to take that into its stride, and we should see the S&P, the Dow, and Bitcoin start to rally. We should see ourselves working our way back up towards the top of this wedge, and that's what we want to see, because that takes you back up to 44.5, okay? We can see here already that the market has all but priced in a single rate hike. So no rate hikes, and we'll see a crazy rally, but we don't expect that to happen. We pretty much have it telegraphed from Jerome Powell that he's going to increase interest rates. The only risk we really need to be looking out for is this kind of slight 2.7% priced in of a double rate hike. And that would be really nasty from Jerome Powell, because that would really catch the market off guard. And he doesn't seem like he's the type of person over the last 12 months anyway that wants to shock the market. He's been very clear with his tapering and now with how he wants to treat interest rates. And he's going to telegraph it. He's going to make it very clear, because he doesn't want a market tantrum. Okay, so that's going to be really, really important. Now, the other thing to note is the following. We get the interest rate decision on Wednesday at 2 p.m. Okay, so that's tomorrow at 2 p.m. We then get the FOMC statement that comes out. It's a prepared statement. Then we get the economic projections, okay? Now, in these economic projections, that's where the FOMC will vote on where they see inflation, where they see unemployment, where do they see GDP. That's going to be a key indicator for the market. The reason we need to monitor this is if the market sees positive trends in there, we'll see the markets become a bit more risk on. That's going to help Bitcoin and some of our favorite altcoins, okay? This is why we need to understand this stuff. Really important that we understand that. Now, the other thing to note is that from Bitcoin perspective, leading up into this meeting, we're seeing a lot of Bitcoin coming off exchanges. Now, leading up to the FOMC meeting, this is very bullish. This is showing that people are buying Bitcoin and having no intention of trading it. They're moving it off of the exchanges, okay? Second biggest day of withdrawals in 2 years. Shout out to Bitcoin Archive for sharing this on Twitter, but it's ultimately from Glassnode. And then the other thing to note is inflation. We know inflation is still an issue. Now, there's two types of inflation we're now seeing kind of merging together, right? You've got this non-transitory, this what we were told is the transitory inflation caused by the excess money printing during COVID, and that sits here, right? We know the figures of inflation were high before the war. And then this war element adds this second portion of inflation, which some are saying this is just a one-shot hit of inflation, that when the tensions subside, we'll see that go away, okay? But either way, that is what's contributed to more inflation than we expected. Now, this on the screen is also bad news, because if you look at the coronavirus cases in China, we're seeing an inflection point to the upside from the 12th of March, and we're hearing more and more anecdotal evidence that China are having more and more troubles with COVID again, with a bit of a resurgence, and we know how China deal with things. Even though it's a small inflection point up, we know the way China deals with things is to go to a mass lockdown. They're closing ports, they're sending workers home. This is going to lead to more global inflation. How do we know that? Well, let's take a look. We saw Elon Musk tweet yesterday, and that was followed by the following. Tesla increases electric vehicle prices for a second time in China and the US. So the prices have gone up, right? The latest price hike, varying from $2,000 to $5,000, applies to its entire. So this issue of inflation has not gone away. We know we need to go into a period of increasing rates. Now, the challenge is, how do we go about increasing rates? If we didn't have the issue of the Ukraine war, you could be a little bit more hawkish. That's a bit more aggressive in how you impact interest rates, how you pick them up, right? He could do double rate hikes if he wanted. Given the environment of the sanctions, the war going on in Russia, we know currently that Russia is close to defaulting, right? What does that mean for the rest of the world? Well, many US and foreign banks hold exposure to Russian sovereign debt. If they default because of the sanctions, it will backfire on the countries that are imposing the sanctions. This is something that the politicians know, but they've decided it's a necessary evil. Okay, and so we're going to have to swallow that, and we're going to swallow that through the impact into the economy. Okay, so the point here is Jerome Powell has to treat this very delicately. And that is why I'm coming to the conclusion that we're at peak fear. We'll very likely see a 25 basis point increase tomorrow. And I think the market can use that as an opportunity to start to move slightly, but surely to the upside. Now, the other thing we're seeing, which is very interesting, and we need to know this for COVID. I know a lot of people don't want to understand the macroeconomics. This is really important to understand this for crypto, okay? Now, the Dow Jones is up 0.8%, you've got the S&P up 1.3%, and you've got NASDAQ up almost 2% today. Why? Because of this, and that is oil. If I head over to the chart for WTI crude, there we go, you will see that oil has fallen quite nicely. We saw it peak at a high. Let's just take, what day was this? The high was on 7th of March, where we had a reading of $130 per barrel. Now we've had a massive drop with another big decline here today on this daily candle. We're now sitting at just below $95, and we know that the markets are looking to commodities, whether that's oil, whether that's wheat, whether that's nickel, looking to these commodities for directionality of what's going on, okay? In times of war, it's the commodity prices that shakes investor sentiment and risk appetite. So if we see this start to fall, you'll see this is inversely correlated to risk on, okay? Oil goes down, markets will want to go up. We're seeing the Dow up, S&P up, and the NASDAQ up. What does that mean for Bitcoin? I know this is very complicated, but we've got to follow the path. So let's just break this down. You've got the traditional markets looking at commodities. If commodities are going down, traditional markets, risk on. If traditional markets are risk on, crypto, Bitcoin specifically, risk on. Good stuff. If Bitcoin's risk on, altcoins, yep, we're good to go. Okay? That's the formula in this game plan for how things are moving right now. So as far as I'm concerned, like I've said in my video earlier, if you've not watched my video earlier, go check that out. But in essence, what we're facing is a situation of what I believe is a culmination of so many fears. And if you take the moment to really write down these fears, I've just jotted these down here for myself. The fears that I'm looking at right now are, you've got oil, but we're seeing that coming down. We're seeing inflation. We should be able to deal with that, right? We're seeing the inflation. We know there's a blend of two types of inflation. We've just covered that off. Then we got a fear of, do we see some sort of nuclear threat? I mean, we can kind of put that to side for now because we're not seeing anything like that. But yes, something like that could affect the markets. Then we want to look at the interest rate hikes, right? So we've covered that off. Interest rate hikes is a fear. It is something that's weighing on the market. But if we see something like 5, 6, 7, 0.25% increases in interest rates over time, I feel as though the market will take that into its path, right? So these are the kind of things on the market right now, whether it's the Russia crisis, whether it's the inflation, whether it's the COVID cases in China. There's a lot of stuff going on right now, which is weighing in on risk appetites, making people fearful. And that is why we're seeing such suppressed prices. We're almost 20% down now on NASDAQ, which is crash territory, right? This is a big fall. I mean, if we show you here what's going on S&P, big move to the downside, right? Like if you look at this daily chart, this is not just a small correction. These are 20% down. If you look at NASDAQ, big moves to downside, okay? And these are moments, we saw what happened in the COVID crash. If you bought in this dip, you would have been loving it all the way up here, right? And this is why we need to train ourselves to buy our high conviction plays on the dips. And that is why, if you've watched my video from earlier on, I was nibbling. I was nibbling in before the green market today, where we're seeing a little bit of a rallying on some of our favorites. I was picking some up, and I was picking up some stocks as well. Even this is a crypto channel, I was picking up some of my favorite stocks as well. Let's take a look at Bitcoin. We've got Bitcoin down 1.43% today, but in essence, it's just trading like a sideways coin is right now. It's trading like a stable coin. So just waiting for this Fed meeting. You guys know we've been monitoring this for many, many weeks. From the start of the year, we've been waiting for these announcements, the CPI reading, and then the announcement we're going to get to tomorrow. So tomorrow is going to be the decision. Are we going to start falling to the downside? That could happen if we get a double rate hike, or if we just get the one single rate hike. We can expect sideways or hopefully a little bit of a rally towards 44.5. But ultimately, the market has priced in a single rate hike. So we should not see any fall to the downside if it's just looking at inflation. Of course, what we can't predict is what happens with Ukraine and Russia. Tomorrow there could be an announcement by Putin, there could be escalation in conflict, something can happen, and that can throw off our expectations in terms of the FOMC meeting. So always be prepared for more downside. Only invest in cryptos which you're willing to hold for the long run. And ultimately, you need to ask yourself, what do you see the long-term narrative as? Because what's happening is you're getting people who are scared to now enter the market because they're scared of 10-15% more downside. So they're willing to give up a double or triple up to the top side because they're fearful of 5 to 10% to the downside. So when I'm nibbling now, it's not because I expect no downside from here on in. I'm not saying I've caught the bottom. Nobody can time the bottom. But what I'm saying is I'm stacking the cards in my favor that I expect there might be 5%, 10% to the downside, a little bit more, but I'm willing to take that risk because I don't want to miss the move to the upside. This as a value proposition to be picking up Bitcoin and obviously all the relevant altcoins at the price points there are, is an absolute bargain for what those projects deliver. As always, guys, if you appreciate this blend between technicals and fundamentals, don't forget to smash up the like button. Make sure you smash up that like button. Make sure you subscribe. As always, what I'm going to do is I'm going to link up a video from earlier today. Make sure you go watch that because I explain exactly what bet I'm taking given this FOMC meeting over the next 36 to 48 hours. Really important that you watch that so you know exactly what movements I'm making. Thanks for watching, guys. See you in the next one.